Recording in progress. Hello, everyone. Happy Thursday. Today I have the wonderful, the legendary, the amazing, awesome Justin Wood. Justin's here in the office with me. He's one of my phenomenal A players. That's all we have on this team is A players. But Justin's on the front end. So many of you probably know him. He's the one that helps with the buyers, just get all that's, all the check boxes done. And I always joke he does the dirty work. I take all the credit. But truthfully, Justin, thanks for joining us today. Real quick, for the realtors, the builders, the financial planners, the clients that are watching this, Justin, how's your week? What'd you do? And I'm putting you on the spot, but give me something. Give me an efficiency, how things can be better in the mortgage world, how just something you've learned or implemented in your personal life. You go. This is your time to shine.
Yeah, absolutely. Well, good morning, Mark. Thanks so much for having me. And always good to get in front of our referral partners and give an update. So this week I've learned, as I am continually reminded with most weeks, that mortgage rates change daily, right? A lot of times we talk to our customers, pre-qualify. The rate is just a placeholder until you actually check the price of that rate. So the best things that make me efficient is building an open dialogue with our referral partners and our clients, and then just letting them know, guys, rates do change daily. And more importantly, just like buying stock, check what the rate is doing the day that you're going into contract.
Matter of fact, just take it away, buddy. Like, keep going. Yeah. So guys, I'll just let Justin, he's already on it. Keep going, bud.
Yeah, absolutely. So rates via FreddieMac.com. That is the best resource, not like a bank rate or just a random Google search. This is a great resource to give you a baseline of what rates are doing. Right now, the 30-year fixed, looking at about a 3.14%. The 2.37% is on the 15-year and the 2.56 come back in the 20s. So right now with mortgage bonds, let's take a look at this. These are mortgage-backed securities. So what we're seeing at the top, you have your 200-day moving average in the blue line, 100-day moving average in the purple line, and 50-day moving average on the black line. So the 25 days, the brown line, and then the green bar is, of course, the mortgage-backed securities on a 2.5% basis. So as you guys can see, green is good, red is bad with our candlestick patterns here. And what happens is that when we see these levels come up like they are right now in the past week, it's giving us an opportunity based on the what's known as a bullish engulfing pattern that took place just before October 25th, where you see that green candlestick start to eat up that red candlestick and go on the way up. Right now, it's testing an important Fibonacci level at 102.68. We're hoping this is the new floor for mortgage-backed securities, but with the talks of the Fed beginning tapering in December this year, we are being on guard to protect our clients. So keep a look, make sure you're working with someone like Mark or myself or anybody on our team, and take a look at what these charts are doing so you can be better prepared to make an informed decision.
Guys, Justin's our resident in-house nerd for this stuff. I mean, I love it too, but the man, as you can tell, he's using the real technical terms. Justin knows his stuff. We all know our stuff, but he especially has just gravitated to loving this stuff. And he called it, we called it, about a week ago. We've been floating for the last handful of days, but that is awesome stuff. Thanks for sharing, guys. Here's what I'm going to talk about today. Apparently, I don't know if you guys know this. There are more job openings than there are like unemployed people, which is nuts. The fact that there's even an unemployment number is crazy. And in fact, what I found mind blowing is that 1 out of 11 people in Texas quit their jobs for the month of August. It was mind blowing. So I don't know why. I don't know how rich these people are, or they're just like, hey, I'm going to quit their jobs, but they have, and there's more people sitting at home than there are. There's more job openings than there are people sitting at home. So it's crazy. The other thing to talk about, guys, is inflation. So if you've talked to Justin, myself, Tamara, Mary, anybody on our team on the front end, inflation certainly can come up when we talk rates. Guys, this is just a story. So Jack Dorsey, who's the CEO of Square as well as Twitter, he came out this week and said he's projecting hyperinflation. It's probably a hyperbole, but the reality is hyperinflation will wipe out an economy, the United States economy, if it really does go to hyperinflation. So to the point, Germany was one of the worst 100 years ago. And this is part of what led to the Great World Wars. But Germany had a loaf of bread that basically cost literally, let's just say $1. You translate to whatever it was. And in that dollar, after hyperinflation comes in, literally what was it? It was like, here it is. The loaf of bread at the end of 1923 goes from $1, right, to then in 1922 to suddenly 25 billion US dollars. So think about that. If a loaf of bread today costs us $1 and the inflation is so much that they were printing money, guys, so fast, they didn't even print it on both sides. They just printed because they're going to have to print more. They couldn't wait for the ink to dry. That's what hyperinflation is. We are not going to get there, is my prediction, because it would wipe out the United States and the world as we know it. But inflation is coming. But I just want to make that clear, that clerical correction on Jack Dorsey. Hyperinflation not coming. Inflation probably is, which is why rates are going up. Justin, help us out with a quick simple access program. What does this mean? So we got some great products, guys, that do some really funky stuff. Justin's kind of been doing just a ton of these lately. So Justin, in a nutshell, give us a good example of what this is and why somebody might need it.
Yeah, absolutely. Thank you, Mark. So with Simple Access, that's really our version of our non-QM product line. So, a lot of lenders out there do have these programs. They can certainly market it and say that they can do them. But the takeaway is that have they closed any? And if so, have they closed them as a company, or have you individually as a branch closed these loans? And I can proudly say that us and the Mortgage Mark team, we've closed several of these programs. The bank statement program, which is just if you have 24 or 12 months of personal or business bank statements, then we can use that income to qualify you and get you access to the non-QM factor. So we don't need tax returns or anything of that nature. We just need to see bank deposits for your business. Obviously, COVID impacted a lot of small businesses, so this has been a phenomenal product for us. And the rate isn't as high as you would think it'd be. It's generally speaking, it's about a 1% over current market, but I have seen some that are even 0.5% or even 1/4% close to current market. So it's not an astronomical interest rate like you think. Investor cash flow, this is literally if you are a rental property owner, let me repeat that. If you own rental property currently that has a lease, you could have been sitting on the couch for 2 years, and as long as the rental income for the property that you are getting covers the principal, interest, taxes, and insurance, then you're good to go. So
meaning $1, guys. So if rent covers all of the costs and it's $1, the guy qualified. Like, this is a real story. Somebody's sitting at home for 2 years on his couch and Justin closed the loan. It's crazy.
Mm-hmm. Yeah, absolutely. And we just had another individual with our asset depletion program, another non-QM program, someone that is of non-retirement age, very important, non-retirement. They had just sold their company and they had a bunch of money in the bank, but now you have no qualifying income for this customer because, again, they just sold their company. We could actually deplete that asset, use it as income, and then give them a great interest rate and a solution to where they could borrow against a loan on the new home versus paying cash and making that money work for them in the market. So a lot of good products that are simple non-QM line. We have access to a private investor that does these, and out of the 4 approved lenders in the entire country, HomeBridge is the #1 in volume by a wide margin. So
let me repeat that, guys. We're #1 in the entire country doing these types of products and programs. So if you guys got something that doesn't fit in the box, give us a shout. Justin's the man. We got other folks that are, the men or women, depending on who they are, but call us. We can absolutely help you. And I'd also just pointed out, I just saw that Justin's wearing the company colors, right? The Mortgage Mark logo on the shirt. I love it. I didn't think to do that today. So thanks for joining me, Mr. Justin. Thank you all for watching. Hope you guys have a great day and a great Halloween, by the way. Have a great and safe Halloween weekend, guys. Bye, everybody.